Global stocks remind me of something my late grandma once said to me. She said, Ronnie, it's better to have it and not need it than to not have it and need it. And that pretty much sums up global stocks. Every well-built investment portfolio needs and should have some exposure to global stocks. Today's ETF battle is a quadruple header audience-requested contest focused on, you guessed it, global stocks. Find out which ETF is the best choice right after this. You're watching Season 5 of ETF Battles. I'm Ron DeLegge, the chief culprit behind this madness, and I hope you're enjoying it. If there's a certain ETF contest that you think we should do, send me your ETF ticker symbols in the comment section below or on our X feed at ETF Guide. We can do double, triple, and quadruple headers, so make it good. And don't forget to check the description section below this video. I've got viewer resources, which include ebooks, links to our program sponsor Direction, and also links to our program judges, so get in touch. Global stock ETFs combine exposure to international and domestic stocks in a neat single package, and they're great portfolio building blocks. Today's ETF contest was requested to us by a viewer named Ephraim Vartsberg. Thank you very much, Ephraim. It's between global ETFs from Vanguard, BlackRock, and State Street Global. Judging today's high-stakes contest is David Dierking with TheStreet.com and Mike Akins with ETF Action, a duo extraordinaire. Guys, great to see both of you. Welcome back.
It's great being here, Ron.
Hey, Ron. Hey, Mike. Good to see you.
And just by way of reminder, be sure to check out what our judges are putting out, some of the great ETF tools Mike is building over there at etfaction.com. You can sign up for a free membership, and then they also have premium services. And of course, David Dierking does one of the best dividend-focused newsletters on the street. So again, the links to both of our judges are posted below. We're going to begin by looking at this contest from 4 categories. We've got cost, exposure, strategy, performance, and then mystery. Mystery is where you, our judges, can pick a single factor or multiple factors that you think are crucial to today's contest. You can also nominate wildcard ETFs if you think there's better choices elsewhere. I've got the scorekeeping chores, and at the end of the show, we'll declare an overall winner. Keep in mind, none of the battle outcomes are ever predetermined or known in advance by myself or our judges. Let's kick things off with the first category, cost. Dave, please get us started.
Well, you won't be surprised that Vanguard's the winner in this category. VT has an expense ratio of 7 basis points. Earth is at 24, IOO is at 41, and DGT is at 50. So it's really not even close here. I always like to look at trading spreads too, obviously. VT is one of the biggest ETFs out there, so trading spreads are next to nothing. The other ones are actually fairly good as well, but at a total cost of 8 basis points on VT, that's the easy winner for me.
Thank you, Dave. Mike, you're up next. How do you see it when it comes to cost?
Yeah, I don't really have much to add on cost for this battle, and I think cost does matter for this battle because you're talking about very broad asset allocation vehicles, and Vanguard is head and shoulders above the others. There are other total world stock ETFs that are cheaper than the DGT, URTH, and IOO. But you know what's interesting, and I'll get into it here in a second, is when I first looked at this, I was like, wow, this is going to be kind of boring. But as I dove in under the hood, there are differences. So cost is not the only consideration when looking at this group. But Vanguard is the winner, and it's not even close on this battle.
That takes us next to exposure strategy. And Mike, you're still up. So break it down for us. What do you see between these 4 ETFs?
Yeah, so we can kind of bucket this into 3 groups. Vanguard it owns everything, right? So it's truly a market capitalization. World strategy, though, primarily it's U.S. and developed ex-U.S., but it owns everything. It has 9,660 companies currently held in the portfolio, and it's a true total market beta strategy. If you want to own all the stock markets in the world, really cheap, efficient way, Vanguard is your winner, head and shoulders. Now you get into some nuances when you go into the next 2. The next category grouping that I would say is that the SPDR Global Dow and the iShares MSCI World ETF DGT, and URTH are developed markets only. So they have no access to emerging markets. Important to note, if you're looking for emerging market access, you will not get it with those two strategies. And they are very different. So they both own the developed markets kind of in aggregate, though DGT, a lot less companies, only 157 companies versus EARTH, which is 1,483. EARTH is a market cap weighted portfolio, so it's large market capitalization. DGT is an equal weight strategy. So if you're looking for broader access where every company counts to your performance and not just those large mega cap companies, DGT is an interesting option. And it's interesting considering how much mega cap has led to the markets. I'm a believer in mean reversion, so there might be something to that story right now. And then finally, IOO is also a market cap strategy, but it only holds the largest 100 companies across the world. And as a result, it has a much higher US equity allocation than the others because it's owning your magnificent seven with really large weights. And I think that's really the way to break it down. So I have two winners today. Vanguard is my overall winner. If you're set it, forget it, you want access to world stock markets, you believe in growth, you can't go wrong with VT. If you're looking for a little bit more quality bent, a little less volatility, IOO might be interesting because it is just mega cap names. These are companies with much higher moat, much higher market share relative to the market, and you should get a little less volatility with that, though you won't participate broadly when the whole market is rolling in a more cyclical environment. So two winners. Vanguard's my overall winner, but if you're looking for something a little bit more focused, IOO is an interesting concept because it does only focus on those largest names.
Thank you, Mike. Dave, you're up next. How do you see it between these four ETFs?
Well, Mike really did all the heavy lifting on this one. As far as the numbers, there's I don't have a whole lot to add on that front, but I took his approach as well, and I split these into two buckets. IOO and DGT, obviously much more concentrated, much more large and mega cap tilted. So you're going to get much more concentrated exposure there, although the equal weight strategy of DGT obviously helps spread out some of that risk. I'm going to go with Vanguard again. I like the fact that they have pretty much every stock in the world here, although, most of them are going to get negligible exposure, but you still have them in there, which provides a nice comprehensive view. It's the only one of these four funds that really has meaningful small cap exposure here, so I kind of like that too. It's got some emerging markets in there. It's got one of the larger exposures to international markets overall, and obviously, your mileage may vary on that, whether that's what you want or not. I personally like the international exposure. I like the split across all market caps. So VT's my winner.
That takes us next to performance. And Dave, you're up. So break it down for us. Which of these ETFs stands out when it comes to their bottom line results?
Well, in terms of historical performance, there's a clear winner here. IOO is outperforming all the other funds, and it's by a fairly wide margin too. Now, that's obviously pretty explainable. It's focused on global mega caps, which have done especially well over the last several years. It's got a little bit less of an international tilt, so the outperformance from the U.S. has affected it as well. So no real surprise as to why it's been outperforming. There's not a lot to add. I mean, with the caveat that past performance is not indicative of what will happen in the future, and I do think that that'll shift over the next several years. But as far as purely historical performance, IOO is the winner.
Mike, you're up next. How do you see it when it comes to performance?
Yeah, I mean, David outlined the exact rationale around the winner of performance, which is IOO, and it's 100% market capitalization. I can take the returns of these four portfolios, 1, 3, 5, and 10 year. They all have been around for a long time, and their returns are directly related to their weighted average market capitalization. We've just been in a market that has really rewarded large mega cap companies. We're not saying anything that everybody doesn't know. It's all over the news cycle, but that is reflected in the performance, which I think, I'm a contrarian. It does lean itself on a forward-looking basis to think that DGT, with that equal weight concept, that smaller market capitalization, broader market participation, is eventually going to close that gap. I don't know if now is the time. So just from a pure macro backdrop, I'm not sure if I expect that gap to happen now. But if you believe in staying the course and you're looking for a little alpha, I would not be surprised. And in fact, I would expect DGT to outperform over the next decade simply through mean reversion.
Well, that takes us next to the mystery battle category. This is where our judges can pick a certain factor or thing that they think is crucial to today's matchup. And so far, our judges have been breaking it down in the most magnificent, awesome way possible. I've been enjoying their analytical prowess. Hopefully you are too. So, Mike, what is your mystery battle category, and which of these 4 ETFs wins it?
Well, as usual, I don't have a outright winner when it comes to the mystery. I just have I pose a question. And what type of investor are you? Because really that comes down to what you're going to like here. If you're a type of investor that wants to set it and forget it and participate in the markets, just buy VT for your equity exposures and move on. It's going to rebalance for you. It's going to take care of the business. It's going to be crazy tax efficient. If you're a builder and you want to tactically create your portfolio, I think IOO, DGT have some consideration in providing different types of exposure. Though you do get into a little bit of the idea of trying to time the market. And I can tell you, I'm yet to find somebody that does it successfully. So, I think you just have to ask, are you building a portfolio with multiple ETFs? Then there's rationale kind of to go down the chain and think about different weighting methodologies, different concentration levels, different strategies. If you're looking to build a broader portfolio, set it and forget it, VT is an excellent option, and it is by far and away the winner in today's matchup.
Mike, if you're looking for a market timing tool, I know of a great AI web app that can help you. No, I'm just kidding. All right, I got you down for VT. Point well taken on the other points that you made, so duly noted. Dave, what is your mystery battle category, and which of these ETFs stands out?
Yeah, my category is going to be valuations, and I bring this up because most investors right now are focused on the Magnificent Seven, large mega cap, growth, tech, and obviously valuations on that have gotten a lot stretched. So if you diversify internationally into different markets, different market caps, you're going to have very different exposures, very different profiles and valuations. So obviously, large caps are much more expensive than small caps. U.S. is much more expensive than international. So I think it's important to look at what kind of portfolio you'd be buying here according to how expensive this is. Now, because they're global and they're not just focused on the U.S., the valuation metrics on these are going to be cheaper than what you find in the S&P 500. URTH and IOO are going to be a little more expensive than the others. Their profiles, other than their number of holdings, are not significantly different as far as international exposure. They've got forward-looking PEs of 18, VTs at about 17, despite the broader coverage and the tilt into small caps a little bit there. DGT, with its equal weight methodology, really gives a lot more weight to those smaller companies, even though it's primarily large cap tilted. The forward-looking PE there is 12. And just credit to Mike and ETF Action. I got all of these numbers off of his website, so please go check it out. There's my shameless plug for this video. But DGT is just a lot cheaper. And as I mentioned earlier, I think value is going to eventually start coming around again. I think international is going to start coming around again. I agree. I don't think it's probably going to happen soon, but if you're looking several years out, I think you want to consider that. So from just a pure valuation standpoint, I think DGT is the winner here. But again, like Mike said, it really depends on what you're looking for. But I think as far as buying bargain price stocks, I think DGT is the clear better choice.
That was a great mystery battle category choice. Thank you very much, Dave. Now we've moved to the part of the show where our judges can give us their overall battle winner. And who will it be? Dave, your final chance to weigh in.
Yeah, I don't think you really need to overthink this one too much. I'm going with VT as my winner. It's the cheapest out of this group. It does the best job, in my opinion, of diversifying across market caps. It includes some emerging markets. includes a little small cap in there as well. I think it's just a better all-around, well-rounded portfolio compared to the other ones. So I'm just going to go with the obvious choice, in my opinion. It's VT.
Mike, your final chance to weigh in with your overall winner.
Yeah, I mean, I don't disagree with David. VT is just the broader product. It's clean, it's simple, it's cheap, it's tax efficient. Just really can't go wrong if you're looking for broad global exposure to the market in a manner that lines up with the size of these companies. I will just put the second note in there, and I think Dave did a great job talking about valuations, mean reversion. Looking out 10 years, if you are a risk taker, if you have a longer time horizon, to that extent, I think there's rationale to believe that DGT will be your winner longer term if you hold it through full market cycles. That's no different than if you take the two kind of kings of the space, SPY and RSP on the S&P 500. RSP has gotten crushed relative to SPY recently over the past decade, but you take it back, since both products' inceptions, and it still has nice outperformance. It just does it with more risk, and there's no free lunch in this world. But if you have a longer time horizon, you're willing to take on a little more risk. There is, I think, academic rationale to believe that DGT will provide some alpha over full market cycles.
There you have it. Our judges have spoken, and according to our final battle scorecard, today's winner, it's VT. And the VT dominated in most categories. I thought at one point this was almost going to be a sweep in favor of VT, but IOO did do very well in terms of performance, at least historical performance. It's delivered some pretty delicious returns, and largely due to, as pointed out by Dave, the heavy influence of those top 100 stocks, those mega caps that have been dominant performers. That's been helping IOO. And then, one of the other points made by our judges, Mike, that VT is certainly the most diversified choice in this battle. Almost 10,000 holdings. My goodness. In a single ETF ticker, you can get 10,000 holdings. That's pretty good. And it's super cheap. And also pointed out that you get some emerging markets as well as small cap exposure in VT. You don't get that in DGT or URTH. You don't get that emerging markets exposure. I thought that was a great point. But looking ahead, Mike said, hey, if you're more of a risk taker, that equal weight approach may favor DGT. So if you're more on the tactical side and you want to maybe play that long game, check out DGT, at least keep it on your watch list. And for you portfolio builders, and you like those big building blocks that can be the foundation of a portfolio, VT is still an excellent choice per our analysis on today's ETF battles. Great analysis by both of our judges, Mike and Dave. Well done. We couldn't have done it without you. Keep up the good work.
Thanks, Ron. Good to see you, Dave.
You guys too. Thanks for having me back.
Yeah, and be sure to check out the description section below. I've got links to both of our judges, so get in touch. Also got a link down there to our program sponsor, Direction. So which ETF battle would you like to see on the next episode? Send me your ticker symbols in the comment section below. Also on our X feed at ETF Guide. I'm Ron DeLegge. Thanks for watching ETF Battles. We'll see you next time.